Good afternoon, ladies and gentlemen. A very warm welcome to you on Business Today Television with our special show, Market Guru, where we get you the finest brains on the Lal Street, professionals and individuals who have made tons of wealth for their customers, for their unit holders in markets which have been volatile in bear phase as well as in bull phase. Over the last few weeks, Indian equities are in prime shape. The market capitalization of Indian markets is above $5 trillion. And for the month of April, the Sensex, the Nifty and the Bank Nifty are the best performing global indices in terms of percentage gains. The Nifty is up 4.5% in the month of April. Bank Nifty at a record high has already added about 11%, and the Sensex is also up 4.5%. To decipher where the markets are headed, to talk about what changes could be in the next 6 months, we are joined by Mr. Manish Jain. He is the Chief Strategy Officer and Director with Mirae Asset Capital Markets Private Limited. Namaste Manish ji, a very warm welcome to you, sir. How are you decoding sentiment on Dalal Street? Are we in good shape after hitting an 8-month low in early April? How do you think the markets are shaping up?
Namaste, Shail. So, you know, answer to these questions, frankly, will differ every week now. So, had you been asking this question to me sometime in March, I would have replied differently. Sometime in the first week of April, I would have replied differently. And uh, I think it's fair because, the way things are moving at such a fast pace, if somebody is going with a very firm view and not able to adapt the direction, will definitely lose. And, you have to adjust your sail the way wind is blowing. So, frankly, somewhere around mid-March,
Yes, sir.
we kind of gave a cautiously optimistic view on the market, and we said
Okay.
that, listen, fundamentally market looks very good in terms of valuation. I'm not talking about the relative basis, I'm talking about absolute basis. On an absolute basis, Indian markets were available at a good valuation. The kind of traditional parameters which we look at, whether it is 1 year forward P, Nifty band and all that. So at that point in time, we kind of were of the view that now uh, fundamentally we are in good shape, but we brought in an element of uncertainty, and we said that during the uncertain market anything can happen. And one parameter which we were watching very closely, that how many stocks were trading below 200 DMA.
Ji.
And we found that in couple of occasions, whether it is COVID or GFC, whenever that parameter dipped um, below 15% and again came back above 15%, the markets have given good return.
Ji.
So what we saw that somewhere around first week of April, after making the bottom, that parameter started coming back to 15% level.
Okay.
Now that hypothesis is playing out, that fundamentally market made bottom somewhere in end of March and April, and then the number of stocks are trading above 200 DMA, which has crossed 15%, and from there on we have seen Nifty has given a return of kind of more than 10 to 11%.
Ji.
So yes, uh, if we look at those parameters, some stability is visible in the market. But if you ask me to crystal gaze, I will have to then go by the way earnings get played out in this quarter.
Okay. Okay. Uh, Manishi, what has also been interesting is the way Bank Nifty has hit a record high. I'll request the PCR to kindly fire the long-term chart of Bank Nifty. You know, erstwhile favorites, 4-5 साल पुरानी की बात थी जब HDFC बैंक और ICICI बैंक के जलवे हुआ करते थे. Look at the chart of the Bank Nifty in the last maybe 10-12 sessions, 5,000 points have been added. Do you think this is pent-up demand for quality assets that may have nothing to do with the tariff problem that the world is facing? What could prompt a record high on ICICI Bank, HDFC Bank and Kotak Bank simultaneously? Do they still make sense at current levels?
Okay, so let's take what has happened into the bank Nifty.
जी
The valuations were really suppressed
जी
overall if we
जी
look at the banking stocks, and
जी
that really led to good demand in the banking stocks. Two things happened at the RBI front as well, where the recently the LCR is kind of moderated, and in between the measures were taken for the NBFCs, where their risk weightage ratios were also moderated. Plus, if you look at the overall environment in which India is macro-wise today, so from that perspective, our inflation trajectory is heading downwards. While our growth is slowed a little bit, but it's not that slow. We are still the highest uh, growth GDP country. Plus, our debt to GDP ratio is also under control. So if you add all these macro factors plus the measures taken by RBI, you will see that that gave a solid reason for Bankex to fire. Um, and I think now on, are these banks overvalued or have they reached at a reasonable valuation? Without commenting into the individual names, I would say that the results have come, and for some of the banks, the results are already out, and they, at least those two three large banks whose results have come out, are not giving a reason to worry in their parameters. So some of these names can continue to do well, but you also need to keep an overall environment in mind that we are in an era where a NIM compression can still happen. So you need to
yes
still be watchful that you cannot really go by the large say a generalized bank Nifty theme. You still need to pick and choose.
okay okay uh, when we analyze markets in hindsight, Manish ji, everything looks perfect. अरे ये तो बिल्कुल होना ही था, यहाँ से रिवर्सल आना था और ऊपर से भी बाजार को प्रॉफिट बुकिंग में जाना था. But what now? Do you feel comfortable with this sudden spurt that we have seen in the Nifty, Bank Nifty, 1300 points on the Nifty, 5000 points on Bank Nifty? What are you telling your clients? Is this a dead cat bounce, or is this the beginning of a new trend? How do you analyze this?
Well, I think, as I said, the answer to these questions are frankly very difficult. So let me tell one thing, that rather than analyzing what happened in October, November, or what happened in March, April, where these were two inflection points. From October, November, the correction started. We corrected very well, and March, April onwards, we started seeing the bounce. Now, if I go back to the parameters which I uh, discussed a while back, this looks like a good level where the market can stabilize. But you cannot really take two volatilities away. One is that your policy volatility, that in which direction the policy will take shape by the US administration, and that can frankly uh, you know throw these parameters and fundamentals away. From that perspective, I will have the approach that, and this I had been telling from the last 6 7 months. One, you still need to have some cash in your portfolio
Yes,
so that you
yes,
are still not regretting if market yet gives you the opportunity.
yes.
Continue with your SIPs so that the accumulation keeps happening at the lower levels as well. And this is the market where, while your equity as an asset class will give you a good return, but I believe that a multi-asset approach is also required here. And I had been uh, tracking gold And return of gold over a long period of time, we all know that has been as good as the returns given by the equity as an asset class. And in these kind of times, you really feel that you should have had some sort of portfolio exposure towards gold. So in say 2025, I'll definitely give weightage to some cash into the portfolio and some gold in the portfolio. And whether markets really stabilize at this level or not, shall you need to keep in mind that in which theme you are going to make investments. Look at the theme which can really double in next 5 to 7 years and add that during this volatile time. So that's the way you need to take an approach rather tracking markets on a month to month basis or on a quarterly basis.
Okay. Uh, what are you telling your clients and ultra HNIs now, Manish ji? How should they approach the markets? Is the best part of the rally over? But where where are they deploying money, or how have you helped them deploy money in the last 15 days?
So, as I said, we were kind of cautious, and I think in my last discussion, uh, I had been cautious till the first week or second week of April.
Okay.
This bounce is a very good bounce, and we have seen that market has been taking turns from these levels multiple times. So now I think if you want to really take a call at this level, watch the levels very carefully, especially Nifty I am talking about.
Yes, sir.
And if we are able to stabilize at these levels, which is I think 24,200, 24,300,
Ji.
then I think markets uh, can give you further return from these levels. Uh, and simple, plain common sense that from these levels, markets have really taken turn a couple of times. So my sense is that wait for some time. If markets get stabilized at these levels, then one can become confident in deploying money further. In terms of giving advice to the clients, uh, Shell, if you look at some of our reports which we released in last few weeks, we had been bullish on the MSME financing sector. I think our clients who would have taken exposure in that, they would have uh, received good returns. We had also been bullish on defense as a sector. And defense valuations really tanked during the correction, but after that, the bounce had been equally lucrative. So there, I think people should have taken some exposure. And these are all public reports I'm talking, which we released on um, time to time. We also released reports on retail as a sector. So people would have taken if they had would have taken exposure into the value retail as a sector, uh, that would have given good return. In fact, the pharma as a sector on a select basis, we released a report on. Uh, we concentrate on domestic theme where exposure to the outside India was not very high. And that has also would have helped people. So some of these things got recommended in last 1.5 months, and those would have paid attention. I'm sure it would have helped them.
Okay, so at this stage, there is some consensus emerging in the market that private sector banks and the defense space has given a certain amount of additional return in the market because one was under owned and one had corrected very sharply. Manish ji, what is your view on the PSU space? What are the subsectors within PSU that you like? Defense, of course, is dominated by PSU, so we take it that you were bullish on that one, and that trade has worked out very well. But how about the remaining set of PSUs? What is your view there?
Shalin, in PSU space, what we track is defense as one sector,
Yes.
and select banking stocks is what we track.
Ji.
So for me to comment on the rest of the space would be difficult because
Okay.
as a house we don't track it.
Okay. Okay. Fair point. And how about IT? Manishji, we still seem to be debating what is good for IT at this point of time. Of course, it's also exposed to the tariff window that we have open with the world in terms of the problem. Have valuations in IT corrected substantially enough for you to be bullish on this? This is the only sector that hasn't worked.
Yeah, um, frankly, tough to take a call at this stage. And when there is some sort of doubt in the mind, it's better to stay away. The reason is, if we look at some of the results are not coming very well. Uh, mm, but has it really bottomed out? I will wait for some more time and some more results to come out and see, how the order pipeline for them is looking, and what sort of feedback they are getting from the US clients. So I think that's very important to watch out. And in my sense, in a large pack of IT, if you can bifurcate between run-of-the-mill IT names vis-a-vis some of the niche names which are able to do justice because of their because they belong to, let us say, mid cap or small cap category. They have a low base. From there they can grow very well, and they are into a niche, let us say, tech design and automation kind of category. My sense is that that segment in IT will do well. Otherwise, the large packs will still take some time to come back.
Okay, so we stay very cautious on IT. Uh, when you look at the domestics versus the tariff problems that we are facing with the US, how are you ranking power producers, Manish ji? Do stocks like Coal India, NTPC, Tata Power, other private producers of electricity make sense to you at current levels? Have they corrected enough? How do you see power demand in this quarter, and what would be your pick from that space?
Shell, what we do that we track power sector, but in the form of power ancillary. We don't
Okay.
track the producers. What the conclusion which we have come to is that power ancillary as a segment is a long-term structural play. And there we had been out in the market with our recommendations and the reports. So on that sector, frankly, we are pretty bullish, and it's not
Okay.
a view for 1 or 2 quarters. As I said, we have taken a structural view on this segment, and I'm sure this market volatility or the market volatility which may arise going forward would give enough time for people to build position in that segment. So I'm long term bullish in that space.
And how about the second rung of NBFCs, Manishi? We've had a record high on Bajaj Finance. We've also seen a very, very strong momentum coming into Cholamandalam Financial. How are you watching the second rung of NBFCs, which also may include, plays like PFC, REC? Is there value to be had in this particular segment compared with the larger players which have already run up sharply? What would be your top pick?
So here again, Shell, we saw that why the whole sector, gave the fabulous return, banks, public sector banks, and the NBFC. Now, without getting into the individual names, one theme which I would still bet on, despite their run up. I think the affordable housing finance, you know, can still as a theme would have some steam left, because inflation is down, more pockets in the consumer's hand, and the lending rates have come down. So this whole segment can still be looked at, even at a slightly elevated valuation.
Okay, fair point. Would you hesitate to name a couple of stocks? Would they be in the PSU setup, or would they be maybe in the private space?
Yeah, I mean, what we track is into the private space.
Okay,
Yeah.
fair point. And how about the railway pack? Manish, this was an erstwhile favorite of both traders as well as investors. Do you feel comfortable with valuations of maybe RITES, IRCON, IRFC? They've also corrected substantially. How about IREDA? Is this a space that Mirae is watching closely for its clients? Are there any hidden gems that have come up because of correction in valuation?
Yeah, I think Shell as a space, this is again falling into the uh, PSU, PSE space, and we have not ventured into this space.
At all. Okay, fair point. And Manishi, before I ask you the last question on gold, uh, what are spaces that you are avoiding completely at this point of time? Till about 15 days ago, there was this massive discussion across the board that small caps and mid caps, we should stop SIPs. This is the reason why markets have really gone on the overvaluation side. Which side of the argument are you as far as SIPs is concerned, and what are you avoiding completely?
So I always believe, Shell, that a SIP is a cyclical investment. If one has started SIP at any point in time, they have to allow 5 to 7 years to play it out. And this is, I'm talking from my personal experience, that on the whole, cycle, 1 or 2 cycles, you have to allow it to play, and that probably take 5 to 7 years. So if you cannot really wait for that long, then 1 year SIP return, you will see that okay, it's gone into negative, and then you will say, okay, let me stop. I probably entered in the wrong time. So that's not really the correct approach. So that's the answer on SIP. What I would really, avoid, I think, as a segment, frankly, passenger vehicle is not looking very good in terms of pent up demand as of now. And within that, EV, there are some structural challenges, frankly. So, I'm talking, Shell, from the long term perspective. Again, this is not like 1 or 2 quarter. So, from that perspective, EV has certain challenges. So, I will not really be EV as a theme. I will not be very comfortable. So I think PV and EV, and I think in previous discussion I said that the overall NIM compression is still the a possibility. So while Bank Nifty has given a fabulous return, one really needs to be very careful that in which name you are getting into. So I think these are the 2 3 areas I would really be careful.
Fair point. And my final question to you, Manish ji, gold. Uh, 1 lakh per tola, and more importantly, up about 30% year to date.
Yeah.
Is this something which is justified? And if yes, how are you defending it? And is this a time to enter?
Again, Shell, keeping aside that, is the level justified or is this really time to enter? Gold again goes through, its own top and bottom. There had been periods for years that, investors in gold were really disappointed. And now there is a period that just in 3 4 months you saw 30 40%, 30 35% return in gold. So gold as a commodity again cannot be played on a short-term basis. You have to again play the cycle, and the cycle, this being a commodity, could be a long, could be a decade cycle. But what we have seen that if you can systematically remain invested in this asset class, it can give
Yes,
you as good as a return and
absolutely.
equity as an asset class gives. So I would approach gold as an asset class from that manner, rather than questioning that is 1 lakh tola a right time to enter, or is should we wait for the correction. So frankly, when I was giving my views to enter into the gold in around January, I don't remember what was the level. It probably would have been in the range of around 80,000 uh, per tola. That time also, if you really anchor that 80,000 is a very high price, should we really enter at that point in time? In the hindsight, you will say that 80,000 was a high price. Should we have entered? Now, in the hindsight, you will say, is 1 lakh the right price to enter? If you keep doing that anchoring, you will never enter into any asset class. So you have to play the cycle and you have to be systematic about it.
Fair point. With that, a wonderful thought, Manish ji, which is so full of wisdom and so full of practical advice. We'll call it a day. Thank you so much for your time. I hope you
Thank you.
enjoyed the questioning as much as we did understanding your answers. And
Absolutely a pleasure.
okay. And let's hope that we meet soon in times that are more vibrant than what they are now, and in times when investors get full and more value of the investments that they have made. Thank you so much.
Thank you.
That, ladies and gentlemen, was Mr. Manish Jain, Chief Strategy Officer and Director at Mirae Asset Capital Markets Limited. There's a lot more that's happening on Business Today Television. Stay glued and enjoy your day.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that addresses all your